Hey everyone, welcome back to the Commercial Real Estate Library. I'm Dama Tamanawala, Sim Minocha, and with us today we're joined by Steve Suske, founder of Cesky Capital, Chartwell, and a number of other great organizations. Sim, you can take us away here.
Yeah, sure thing. I figured we might as well just get right into it because Steve actually was kind enough back when Damon and myself were at Ivy to be the first sponsor for Ivy Real Estate Club at the time. So he's helped us out.
We're still sponsoring that puppy.
Oh, nice. There you go. Actually, we hired for Avena Capital, who I work with, one of the ex-presidents there, and he said that they started a dinner with you every year. You take out a bunch of the real estate club.
Every year we host 2 dinners at Jonathan's in Oakville.
Oh, okay.
And we call it a 5 by 15, so we get 15 students, HBAs, MBAs, and we get 5 or 6, sometimes it gets up to 7 alumni from Ivy who have specialized in real estate.
Yeah.
So we get developers, we get lenders, we get brokers, investment bankers. So it's a good, so everybody shares. So we've been doing that. I think we're this coming year will be our 4th year, so we're pretty excited about that.
Great. Well, I mean, you did receive the Ivy Distinction Award, I believe, a Distinguished Service Award as an alumni. So that service has been recognized.
Yeah, I always believe you got to give it back. When I went into Ivy, I didn't know a debit from a credit. Still don't. But
yeah, we're still learning too.
But Ivy was a great leaping stone for my career, and so I don't mind giving back.
Great. Well, Steve, you're what's known as a seniors housing guru and have a lot of experience on that side of the business.
Yeah, they call me the Dean of Senior Housing.
Yeah, the seniors housing guru.
Yeah. So
we'll go with that.
I mean, why don't we start right with one of the coolest things that I had remembered hearing from you in the past, and that was about Chartwell Reid and the whole process of taking that public, etc. What was involved in doing that, and why did you decide to found it and go that route?
Right. I got involved with senior housing in 1992. I was with a company called the Marcel Group, which evolved into Marcel Trust, which became DS Marcel, RBC. Mm-hmm. And so I was working on a project just over here at Aaron Mills Lodge, Aaron Mills and Parkway. So we did that deal, and it was it was 2 warring factions. Partners were warring. There was a retirement home, 147 bed retirement home, and an 87 bed nursing home, and they had sold off the retirement home to a bunch of investors, but they skewed all the fixed cost over to the investors. So the nursing home was a cash cow. Nursing homes aren't that. They're a whole bunch of other things, but they aren't cash cows. And these poor old investors are writing checks every month to make the mortgage payment. So World War III erupted. And I went in there and settled all the lawsuits. And for a consideration of $10,750,000, I put CMHC insured financing on there for $11,750,000. So we put $500 in our jeans and $500 in the project, and I was in senior housing. To get back to your question, I soon realized that senior housing is a very, very capital-intensive project. And, for instance, we're building now that we need to when we build a 140-suite retirement home now, we need at least $10 million of equity. So it's very capital-intensive. So I worked through the 90s and trying to get aligned with capital, decided I had to do it myself, and founded Chartwell Seniors Housing REIT at the time. So that was 2003. And Chartwell, I'm proud to say, is the largest owner and operator of senior housing in Canada. And so that was a great legacy to leave behind.
And when you say founded Chartwell, what goes into that? Like what?
A lot of sweat equity, a lot of nervous nights. Who knew that doing a public company was so expensive, and all that whole risk was the costs, for underwriters' costs and appraisal fees and audit fees. It was just enormous. But we lucked out. We were able to put together a really strong syndicate. We were 4 times oversold, and we hit the ground running really well. So it was about a $250 million raise market cap, and now I think Chartwell is into the several billions of market cap. So.
And Cesky Capital was founded prior to that, correct? You were on the capital side, private equity side before that?
Yeah, I've been always, Suske Capital is a private equity company, and now today we principally funding about 40 what we call strategic development partners who are friends of mine who are developing senior housing all over North America.
Right.
And we provide not only the mortgage debt, but the mezz financing and the equity. And we take pieces of deals going through.
So is it like LP stakes and limited partnership stakes inside the projects, and you're using a general partner?
Yeah, that's what we're doing. So, that's really in senior housing. Senior housing is a great business to go in because we have the demographics working with us like never before. We have the baby boom is coming. When I got into the business in '92, I used to tell the lenders, well, on a new project is a 24 or 36 month lease up. We still tell the lenders that 24 or 36 months, but we're leasing up in less than a year now, and that all speaks to the baby boom and the demographic hockey stick that's happening all over North America.
Right.
We have a facility in Bowmanville that it's 140 suites, and we literally leased it up in 1 year, and that was really great.
Can you speak to so like that? I mean, I think when I was going through Ivy, I was thinking about all these different business ideas, especially in the entrepreneurship club. And just, okay, well, a business for the baby boomers would be perfect. But obviously, not everybody gets into seniors housing. It's really difficult.
Well, touch wood, there's a lot of barriers to entry to senior housing. As I said, one of the
regulatory?
Not necessarily regulatory, but the lenders won't lend to you unless you have a track record.
Yeah, you just operate in the past.
Yeah, so we have to operate these things. You need, as I said earlier, $10 million in cash to do these to do one project. You have to have the covenants to be able to support the first mortgage and the mezz lenders. But the lenders won't play ball with you if you are a rookie. For instance, I'll give you a perfect example. Everybody knows the great reputation of Tridel, and this is before our Chartwell days. And Tridel had to come to us, and we managed their first several projects for them till they learned the business. But they needed the lenders were saving even to Tridel. You have to you have to have some experience. So we taught them for the first 3-4.
That was Delmanor Communities, correct?
That's right.
At that time, okay. And just to sort of speak more off those demographic trends that you're referring to, how is it that you determine the number of beds or the correct suite mix and which markets that you're looking to enter based on your experience in the past?
Okay, we take it a very scientific approach, if you will. So the first thing that we do is one of my companies, MTCO, which is stationed out of this office and concentrates around the GTA.
What does that stand for, MTCO?
Measure twice, cut once.
So nice. Okay.
We hope that,
scientific.
So that's pretty scientific. But what we do is we go and retain CBRE. Like I know you're with different firms, but CBRE has a very strong and very senior housing expertise.
Fair enough.
They do market feasibilities and appraisals. And so we say to the head guy on the feasibility side, his name's Paul Marsh, we say to Paul, can you give us tell us the top 80 markets in the province of Ontario? And he does his studies. He looks at, demographics, wealth of
the population,
neighbors and things like that, and comes and tells us the top 80 in order. With the best market right now, the best market right now is Burlington. So anybody out there who has a piece of land in Burlington, please come and see me.
We'll leave Steve's contact info below, just so you can reach out to his people.
But Burlington, not just this year, but for the foreseeable future, is really because people can pay the rents. There's growth out there, and the residents are elderly, so that's good. So we send our scouts out to say, go find a site in Burlington or Hamilton, or
Mm.
we're doing a deal in Stony Creek now, and there was a big market for there. So that's the first thing we do. Then we find the land. We tie it up. Usually none of these projects are zoned for retirement homes.
Okay.
So there's a zoning process that have to go. And they're usually commercial or residential, and we have to take it through that. So we usually get terms with the landowner to.
What is the retirement zoning? Like, that's a specific zoning in itself?
Yeah.
Okay.
It's a residential. Sometimes they call it institutional.
Yeah.
But we
It's
work
good.
with the land vendors to get terms. So we get to a site plan approval, then we close on it, and then by that time we have we've done all the work.
Mm-hmm.
We have the working drawings, and we build it, and then we lease it up. And then our what we do is we sell to the big players like Chartwell or Sienna or whatever. In Ajax, we did a deal where we opened it in June, and we sold it to Chartwell in September. It was 50% full. And it was what we call.
They're buying now with 50% occupancy.
Well, we gave
Wow.
them an NOI guarantee, which
Okay.
we guaranteed the net
Income,
operating
yeah.
income for
Wow.
for a year or two, but we were able to get full buck out of it. So that was a nice winner. It was they bought it for $56 million and cost us $30. So
And you
that's
just
why
do
we're
a
in the
lease on the
development
whole
business.
place.
Okay.
Right.
And just a Sims question, can you speak to the ideal number of units? Like, I know,
Okay.
like a lot of these smaller guys, you wouldn't be interested in like a 60-unit building, would you? Or
No. Unless it's memory care, private pay memory care, which
Just
are
higher.
so what we concentrate on, or Cesky Capital, we get in what treat of the week these days is seniors apartments.
Okay.
And we're doing seniors apartments all over the place.
So is that independent living then, primarily,
No,
or is that assisted?
it's not. It's apartments with very little care. With the residents could cook in their rooms. We may have a bistro.
Okay.
Oftentimes, it's connected to one of our independent living and assisted living retirement homes. So the seniors apartments are attractive because the eldest daughter says to mom, "It's time, Mom. Dad's died, or you've had a fall," and she doesn't want to go into retirement home. But the the eldest daughter gets satisfaction. She's in a apartment with seniors connected to like we have a project in Collingwood, and that the seniors apartments went leased up first.
Right.
Because the eldest daughter knew that if something happened, Mom could call over to the retirement home and staff would come, etc. And if they needed meals or medication, they could go and get that. So there was a sense of comfort. So that's the first thing that we do. And we do independent living and assisted living, and then we also do private pay memory care. We don't finance long-term care at all. There's really no money in long-term care. It's government licensed, funded, and regulated, and it's not really where we want to be. Some people make a living there. But to get back to your question, so the seniors apartments can be anywhere from in Collingwood is 50 units. It could go up to 120. Independent living, assisted living, the sweet spot there is 120 to 140. And then private pay memory care that we do is around 60 to 90.
Okay.
That's getting on the high side, 90, but around 80.
Do you mind? I actually don't know what that is. What is private paid memory care?
It's dedicated to residents who have an advanced stage of Alzheimer's or dementia.
Okay.
And they can't, and that's the biggest problem in the Canadian healthcare system right now, that if mom has, or grandma, in your case, your grandma has dementia and she's in the hospital, the hospital can't discharge her back home because nobody's there to look after her. The retirement homes don't want her because she's too much care.
Right.
There's, in the province of Ontario, 34,000 waiting lists for long-term care. That's a lot of people.
Yeah.
So we find in select markets, high-end markets, where the residents pay, the families pay $6,000 or $7,000 a month, that is a huge demand. So that's what we do. So it's all dedicated to the residents with dementia and Alzheimer's.
Yeah, speaking personally, I know my grandfather, he's actually in a situation where he's having some dementia and other situations like that, and he was in the hospital, and they have to, and it's similar to memory care facilities where they have to enclose you in the space so you can't go outside, because sometimes when they have bad cases of dementia or Alzheimer's, you don't want them to be running into traffic or running outside. So the hospitals, they keep them not locked in, still able to move around, but on a floor which is dedicated for that use. And that's the same with memory care. Often you'll find even a floor of memory care in a seniors housing facility which is dedicated to
and locked and secured.
Yeah, exactly. So just speaking to the process from going from actually buying the investment and taking it through the zoning into actually operating it, how are you able to sort of, is it government backed, the programs that are in place right now to get these beds filled, or what's the process for going out and filling these units up or these properties up after building them out?
Yeah, well, first of all, none of what we're building all over North America is government subsidized.
None of it. Okay.
None. Well, in Alberta, it's a little bit of care subsidy,
right.
But we're primarily in the what they call the private pay.
Okay.
So the governments don't get involved. Like, for instance, if your grandma wants to go into a long-term care facility, she has to go to the government and get on a list there. So we're not involved in government lists and all that. It's all private pay.
You can't operate long-term care without going through the government?
That's right.
Okay.
They regulate what.
Has the government given any subsidies to incentivize building of more senior space, at least? Like, you know how
they used to do that in Alberta, but
in Alberta
they can't afford it anymore. So they just subsidize the care in Alberta.
The building of the space.
Yeah, but the developer has to do the rest.
What are the most what markets are you most heavily invested in right now, and which markets are you looking at right now? At Burlington, you mentioned, is one of them, and where you see the most opportunity for seniors.
Well, for MTCO, we have projects going in Barrie. As I say, we just completed a lease up in Bowmanville, and we're just completing a lease up in Collingwood. We have a project about to shovel ready in Stony Creek.
Nice.
We have projects in Oakville, Burlington, Keswick.
All over the place. Yeah, there you go.
Sudbury. We have a great site in Sudbury. So, we're opportunity driven.
Yeah.
So if a broker comes in and then we look, is there a market there? We immediately go to CBRE. How deep is the market? Is there an unmet need? And if there is, we get all over it. And we start the process.
Okay, and there seems to be a little bit of a amalgamate, like a big acquisition front for Chartwell and a lot of these other groups. Why?
Yeah, when I did Chartwell in 2003, the play was we were the biggest consolidator of the Ma's and Pa's all over Canada.
Right.
Okay. Quite frankly, those days are gone because everything has been consolidated. Only what's left, for instance. We talked about Tridel. They have a nice portfolio, but that's a family company, and they want to pass that down to their kids. Sifton Properties, another company I got involved in senior housing. Same thing. They have a portfolio of senior housing, and they want to hand it down to their kids. So
the London Sifton Group.
Yeah, Schlegel's are another family-owned company. So all of those portfolios, which are beautiful assets, aren't really for sale. So you see in some of Chartwell's press releases that they'll announce that they bought one home, 100 units, because those days are gone. There are pockets, but I think in the senior housing business, the consolidation opportunity is over. What's happened, and I called this way back in 2003, was the securitization of senior housing. And not only through public companies like Chartwell and Sienna and Extended Care, but the pension plans, since I did Chartwell, have been active. So, for instance, Amica is owned by Teachers. Revera is owned by PSC pension fund. So you see the pension funds getting involved, and that's what I call the securitization of the retirement sector.
In BC, there was the big transaction in the retirement space with a lot of Chinese-based capital coming into the country. Have we seen that same trend of, let's say, hundreds of millions or billion-dollar transactions in other provinces, or do you think that will start to be a trend going forward with foreign capital coming in?
Well, the last big acquisition was the teachers bought Amica, and that was the last of the big ones. I don't. We do a lot with the Chinese community, but it's high net worth individuals,
Right.
Canadian, who invest with us through a company. Cesky Capital owns 50% called Chancery.
Okay.
And we work with various strategic development partners, and we have a seniors apartment in Oshawa. We have another one we're starting in Bradford, and so we're working with the Chinese community, which we're very, very loyal, and they understand good deals. And I have a great CEO, Jessica Zong, who runs that, and she's a force to be reckoned with. So we're really delighted that we've teamed up with Jessica a few years back.
Okay.
She didn't go to Ivy.
Oh, come on.
Are you seeing any trend toward privatization of seniors housing REITs, like existing secured or easily liquid companies that are traded on the public markets becoming private? Do you see that being a trend going forward?
We're actually working on our with a private group from Spain who are very interested in acquiring brand new state-of-the-art facilities. So we see that's not pension funds. It's and it's not the Chartwells and Sienna's public money. So it's we're seeing a lot of people want to get into this space because everybody's got experience like your grandfather, right? So everybody knows, right?
And then like, what are the biggest trends that you see like over the next 5 years? I mean, if more and more people have a need for seniors housing, is there going to be some sort of breaking point? Is there like what should we expect to see in the next couple of years?
Well, as I say, there's a whole bunch of barriers to entry getting into the sector, which is good. The big guys like Chartwell, they have a pretty active development program, often situated in expansions. I bought a chain while I was in Chartwell, and they were a long-term care chain, and they had land next door for retirement homes. So Chartwell's kind of filling those out, and they have a very active program in the province of Quebec. And they have some very innovative projects going downtown Toronto. So, but development is highly entrepreneurial. You have to be able to turn on a dime. Yeah. And these bigger companies can't really turn on a dime that quickly. And so there's all kinds of opportunities for companies my size to get in there and tie up a project. The hardest thing in senior housing is finding the land. Yeah. If you find the land that's in a great location, near a hospital, near pharmacies, and it's quaint, and the seniors, and it's near where the eldest daughter lives, and you got a gold mine, right? So those things are hard to find, because usually a condo builder wants to get in there first and thinks they could pay the world, you know.
And is that what you find? Like, can they pay substantially more than?
Sometimes, if there's the condo market's hot, that kind of takes out quite a few.
But oftentimes, markets that you're looking at, like you're talking about markets that are not traditionally condo market. Let's say Keswick, you mentioned before. Yeah. I wouldn't consider Keswick.
Not too many condos in Keswick.
Yeah, a condo development market. So it looks like that.
No, but we're doing a site in Oakville, which was a condo site, and
whereabouts is that? Or is it currently
pretty confidential? Okay. But the developer was getting a lot of negative feedback from the neighbors, but the neighbors ended up loving because senior housing is like motherhood. Everybody's got a mother who's getting old, and so that's a good thing, right?
So you have less NIMBYism.
Yes,
than you would otherwise.
Exactly.
There you go. So obviously you've talked about being opportunistic with a lot of your plays in the senior space, and with starting ventures and companies when you thought were at the right time to do so, like Chartwell, or like involving yourselves with Delmanor, etc. So being an entrepreneur and having that entrepreneurial background, what made you want to sort of become an entrepreneur? And why was that also an opportunistic thing? Just it happened to happen, or was
I think I've always been an entrepreneur. When I was a Boy Scout, I figured out the best place to sell apples on Apple Day was at the bus depot. Yeah. And I used to win the axe every year. That's what you win, an axe.
Okay.
Of
There you
selling
go.
most apples. So I was always entrepreneurial right from the get-go.
Right.
When I was in the MBA at Ivy, there weren't too many of us, and this was in 75 to 77. There weren't
Yeah,
too many of
just
us
two
who
classes
were,
there.
and well, there were 4 at the time,
Oh,
4
okay.
sections. It was a
Okay.
2-year program.
Right.
There weren't too many entrepreneurs in the room.
Yeah.
There was a couple, but I just have it in my, I don't mind taking risks. I can measure risks, and that's why we're doing solar farms in Poland. We just entered into a deal with a renewable natural gas developer, which are great returns. I can't believe. So we have invested in a whole bunch of different things.
Can we dive a little bit deeper into that as well? The solar farms.
When I was working in my early days in real estate investment banking, a friend of mine, we worked together, became buds, and that's another thing I would say to any young kids is that work your networks, because that's really, really important. He ended up in Poland. He became very interested in solar farms in Poland. I financed him, and now we're about to build about 200 megawatts of solar farms. It was a long haul. I was going to say effing haul.
You can.
Yeah, we're not a
Feel
politically correct podcast here.
But
so.
finally, the Polish government passed legislation, and we just won a whole bunch of contracts, 15-year contracts with the utilities that they will buy our electricity. So it's just about to really take off. So we're really happy about that.
So,
But why did I get involved with him? Because he was a buddy of mine, seemed to have a good idea. The investment treatise made sense, and we invested.
so interesting. Like, you're not just a real estate owner; you've also been an operator in seniors, where it's a lot more hands-on. So you have a lot more experience than I'd say someone in just owning a multifamily property, right? So how would you apply that real estate experience to something like Polski Solar? And now it's, I believe, the largest solar development company.
Well,
in
it's easy
Poland?
because it's exactly what we're doing. So we have to find a piece of land that's kind of facing the sun, and get it zoned, take it through the environmental approvals, get it connections to the grid. So it's just like any kind of senior or any kind of real estate development.
Right.
And then you build it, takes 4 months, and then you're cash flowing right off the bat. So after you win the auction to get the contract for 15 years, and that took us time. But now we could win them at our leisure now, so we're feeling pretty good about that investment. So that's and the same with renewable natural gas. It's the same thing. We build, it's a real estate process. You got to take it through zoning and all the approvals, and at the end of the day, it generates cash flow.
And just
away.
And just to speak to the scale of 200 megawatts, how many, acres would that be?
I don't know how many acres it would be, but it would be about 300 million of enterprise value.
Okay.
Wow.
All right.
Is One Energy? How exactly did that transaction happen with One Energy? Is that am I saying that name correctly?
Yeah, we actually just killed the One Energy deal.
Okay.
Recently because it.
Okay.
So
press release there.
no.
Just wanted to check. Okay.
Yeah.
So in terms of running a public company, because you're running it at Chartwell, when you founded it, I'm imagining, versus running a private company at Cesky Capital, what are the differences in the two in terms of how you had to sort of lead the companies and in terms of how they operated?
Well, in the public companies, and we were, I was involved in 4 IPOs. One was Metro Capital Corporation, which was in early days. It was senior. It was apartments and seniors, and we took that one out with a partner of mine. And it was just a $90 million raise, small in today's standards. So the idea was to get 10 pension funds, $9 million apiece. And then we got one pension fund, which is the case to Poe, who wanted to take the whole thing. And my partner didn't want to be in bed with one pension fund. So
big gorilla in the room.
Yeah, so he decided to not do that one. And so we went our separate ways. And then I did Chartwell. I subsequently tried another one called Renaissance, which morphed into Regal. And we were successful with Regal, which went out at 10, and we sold to Revera at 12. So that was successful.
Can you do you mind walking us through a little bit about how that process works? So it's like how many, you have a certain number of buildings and a certain, you know, market value of assets under management, and then you go like, how, if I want to start a REIT today, how am I doing that?
It's primarily, as I say, using your network. So when I started Chartwell, I made it a point to go and talk with all the other owners and get my name out there.
Right.
And people were they knew who Steve Suske was, and so people, and they still come to us with, you know, with projects.
Yeah.
And so we just started to say, well, okay, if we had this portfolio and that one, and all of a sudden, we have a $200 million market cap deal we could do here. Let's tie them all up, and let's find an investment banker, and let's go with it. So that's how it all happened.
So you'd always have a pool of assets that was never a blind pool raise or anything like that, where you'd have
you have to have sources and use, and you need to have the projects tied up under contract, and then you have to go through a lot of work. You have to get CBRE appraisals. You have to get 3 years audited financial statements. You have to get pension, environmental. The whole crew. So when you go to market and you've got everything buttoned down, and
so these are portfolios that when you say you tied them up, like they're under contract for many months.
I tied them up, and we tied them.
How many assets does that, for that, let's say the initial Chartwell raise, how many assets would that have
I
been?
really forget now, but it was quite we brought a few with us.
Okay.
I bought a company called Alert Care from Cesky Capital, and that was a big part of the portfolio. And then we had a whole bunch of onesies and twosies, and we built the company like that.
Okay, interesting. I'm also so obviously I work at Colliers, and you mentioned CBRE has a great seniors housing division. Is there anything missing in seniors housing that should be provided by like a brokerage or something like that? Like, I'm just kind of thinking.
That's a good question. You want me to put on my broker hat?
Yeah, absolutely.
What we like brokers who kind of get our vision and spend some time with us and understand what we're looking for.
Right.
And it's a high dialogue kind of thing. So if we say we're looking for a site in Burlington, as I said before, we want them to be not throwing a bunch of shit at the wall. We want them to, kind of say, okay,
qualified
I got a great
opportunities.
location on Main, and what if I brought you that, and all that kind of stuff. So we like intermediaries that kind of are thinkers and movers and shakers, and understand what we're looking for, and can work with us in tying up, and have good relationships with the vendors, because often it's the intermediary who can make the vendor feel confident that MTCO or Cesky Capital have got the resources to close on the deal,
right,
et cetera, et cetera. So it's a confidence game to a certain extent.
Okay.
Just going back to the public versus private thing, sorry,
I'm gonna have that.
There we go.
Be in and out the whole time.
Okay. So when you were a REIT, was that actually limiting to you in any way, not being private?
The whole notion of I'm so happier now in being in a private company, working with strategic development partners who are private, than public boards. The boards have a fiduciary responsibility to the investors, but it's not the milieu that I feel comfortable in. Because you have to make, especially in development, as I said before, you got to turn on a dime. You got to be
opportunistic.
So I think public companies are a great opportunity for people to manage the homes like pure opcos. But the devcos, they don't really have the expertise nor the entrepreneurial view of things to make things happen, create value.
You don't see a lot of developers, just natural developers go public. You don't, if you look at the
No, well,
the
there's too much juice in the deals, or, and we won't get out of bed for a retirement home that we can't make $10 million. So,
what type of yields do you look for? Like, what type of investment yields are you looking for?
It all comes down to creative value. Or we take what we think we could get from the big guys is 6 cap, 6.25 cap on stabilized NOI, and then we look at what we could bring it in at, and that results in what we call creative value. Remember that term from Ivy? And so that's the juice that's in the deal. So
are you guys targeting, like, I know on condo projects, like if you're buying an income producing apartment, you're looking at, let's say, like a 4%, 3% cash on cash right now in today's market, and maybe a 10% IRR. But if you're buying like a value add, you can go like 12 to 15, and on development it's got to be like 18 plus. So what are you guys typically looking for? Because seniors is a bit, I'd say, more risky in some ways and less in some ways than a condo project, because you don't have that defined exit of a pre-sale. But so are you doing a bit of a premium to that, call it 18 to 20% yield that condo developers are looking for?
We're doing better than 18 to 20% IRRs on our deals.
Okay. Okay.
Let's just leave it at that.
Yeah. There we go.
Yeah, we're doing, so. And that's a good business to be in. And that's just not in Ontario. It's all, we're finding that all over North America, really. So we're making those kind of returns all over the place.
And are you guys, I guess you guys are operating in the U.S., and like which different markets are you in across the border?
Well, it all goes back to partners. So I have a very good partner called Les Craig, who is a company's called Avenir, and we've been doing business for, what time is it?
Sorry, I think you got a hard stop in about 2 minutes. So
I do. Okay.
We'll wrap you up here. We'll
so Les Craig is we were involved with him in the Lower Mainland in British Columbia.
Okay.
And he moved down to Arizona, and we're building in California, Nevada, Arizona, memory care down there. So that's the kind of stuff we're doing.
Okay. This is a question that we do with all our guests, and so first off, I want to say thanks so much for your time. Is there anything that people should be paying attention to or focusing on that you guys are working on? More eyeballs from brokers, from like, I don't know, in terms of people sending you opportunities, or like, is there anything that you want to draw attention to?
Well, we're always looking for land. Land is the hardest thing, and we could give you an answer real quick if you brought us something in, let's say, Kitchener, where we know it's kind of overbuilt.
Got it.
We could tell you real quick, Kitchener is overbuilt. But if you brought us something in, we know, for example, if you brought us another deal in Bowmanville, we'd say, that we just built one and we're happy. There's no more room in the market. So we can get back to you real quick.
Okay.
And so we're looking for developing relationships with brokers. I mean, it all comes down to relationships.
Yeah.
If we treat you fairly, you're going to treat us fairly, and if we're responsive, you appreciate that.
Okay. And then just to sum it up, or to finish it off, sorry. This is a question we call the 3 truths. So it's a little existential, but
I have a BA in philosophy, so.
Okay, yeah. Okay. So imagine years from now, imagine you live till 120 years old and you achieve everything. Yeah, you achieve everything that you ever wanted to, and I mean, it seems like you already have, but even more, and your kids and your grandchildren and everybody's around you, but it's your last day, and for whatever reason, all of the interviews that you've done, all of the books that you've written, they're all gone, and you have 3 short notes that you can pass on to the people who love you. What would you put on those notes?
I would say have fun, work hard, and love your family. I mean, that's really what it's all about. I mean, here at Cesky Capital, if you walk around, they're either my kids or my in-laws or my, that we're a family business. So
right.
So part of the succession plan for me is to is to help the kids understand the business and take it on to the next level. So, okay.
Awesome. Thank you
That's
so
great.
much.
Okay, thank you.
Thanks, Steve.